Hi everyone, welcome to Ciphr's tax year end 2024 payroll update. It's great to have you with us today. Thanks for fitting us into your diary. I'm Catherine, I'm Ciphr's head of content, and with me is Jaspal. She's the director of product for payroll, compliance and data. Hi Jaspal, welcome to today's broadcast.
Thanks, Catherine. Hi everyone.
You've got a little bit about you on the screen there, but I think it's worth just telling everyone just how much experience in payroll you have, if you wouldn't mind just giving us a quick overview of your career history.
Yes, sure. I'm pleased to. So I've been working, well, my career started off in operational payroll. I won't say how long ago, I'm not going to give my age away, but it's been a long time. I started off working in the Housing Association in the payroll team, but since then I've worked for universities, another housing association, also a branch of GE. So you'll all know of GE, they're a multinational organisation. And then I've also ran a payroll looking after a team of 12 at Warwickshire County Council. That was paying over 30,000 employees or thereabouts. But then I moved into onto the software side of things about 12 years ago. So I've been in product management since then, worked for a number of different software providers, and I joined Ciphr in December last year. So quite new to Ciphr. I'm also a chartered member of the CIPP, and I've also judged the CIPP Annual Excellence Awards for the last 2 years.
Fantastic, thanks Jasper. I think that's all to say we're in safe hands today, but we just want to note that today's session is just giving you an overview of publicly available knowledge. If you have any specific questions about how to apply tax regulations to your individual organisation, then please go and seek advice from a specialist employment law firm or other tax advisor. We are not giving advice today. What we are giving you today is a quick tour of Ciphr and an overview of legislative changes that will affect payroll for the 24-25 tax year. Thrilled to say that we've got a number of options of ways that you can talk to us on today's broadcast. There's a chat function, so if you want to chat amongst yourselves or put in questions, you can use that. There's also a more formal Q&A option. We'll also be using some polls, so I'm just going to send one in now, which feel free to answer that at any point in time, just to let us know how you're doing and give us a hello. So thanks in advance for taking part in the chat. And before we get started on the legislative updates, a quick overview of Ciphr. This is the bird's eye view of what we offer. We are primarily a HR software and payroll provider. We offer lots of different payroll options. We do payroll software, we do payroll bureau, and we do outsourced payroll. So pretty much whatever you want when it comes to payroll, we can offer a solution that fits your needs. You can find out more about our HR and payroll in particular, as well as other solutions mentioned on that slide at ciphr.com, or you can email info@ciphr.com for information about any of our products or to speak to one of our specialists. And with that, I'm going to hand over to Jaspal. Be able to take control of my slides.
Go, thanks for the reminder there. Right then. So we'll cover all the usual sort of tax changes and all other regulation changes as well. So in front of you is just a quick overview of what we will cover. So let's move to the next slide, please. Okay, so for tax thresholds for 2024-25, there is no change to the standard tax code, so it remains at 1257L. The personal allowance means the personal allowance will remain at £12,570, and that's going to remain frozen until 2027-28. And then just a reminder about the personal allowance. So there is an income limit attached to that. After the £100,000 earnings limit has been reached, the personal allowance reduces by £1 for every £2 earned. That effectively means that if your earnings do reach £125,140 or above, your personal allowance is reduced to 0. And then just a note there on the married couples allowance income limit, which is now £37,000, so a slight change there. Let's move to the next slide, thank you. So quite a few changes actually to the Scottish tax thresholds for the tax year ahead. The starter, intermediate and higher rates will remain the same as last year. The top rate will be increased by 1p, sorry, to 48%. To those earning over £125,140 per year. The bands where we see some major changes, well, we've got a new band that's been introduced called the advanced rate, and that will apply to those earning from £62,430, which is £75,000 when you factor in the personal allowance, up to £125,140 in taxable income per year. Additionally, the basic band and intermediate band will be increased by inflationary figures to apply from £14,877 and £26,562 respectively. A lot of numbers here. The starting point of the higher and top bands will, however, remain the same. Next slide, please. So, as announced in the budget last week, in the spring budget, the national insurance thresholds have changed. So we've seen a reduction of the employee rate from 10% to 8%. And as you can see, that's highlighted within the relevant threshold on the screen in front of you. And then just reminder there of the other types of employee thresholds that will apply from the new tax year as well, including the free ports, investment zones and veterans upper secondary threshold. Next slide, please. And then just to confirm, the SSP rate is now £116.75, and just a table there to illustrate how that applies depending on the number of days you split that over. Next slide, please. And then just to confirm some of the other statutory payments and deductions. So on the left-hand side of the screen, you'll see that for your statutory maternity and other parental type payments, the rate is now £184.03 a week. And then on the right hand, we'll look at deductions. So the student loan deduction, a new plan has been introduced, Plan 5, and that will affect students starting from August 2023. So that is something that you should already have in place. It is an increase to previous plans, meaning that students will pay, or some of them will at least pay, more than double the amount of previous years, and graduates will start paying back their loans at a lower salary. So in effect, it is, you know, perhaps not as beneficial to students, depending on how you see it. But yeah, they'll certainly be paying more than under other plans. And then the maternity leave, adoption leave and shared parental leave amendment regulations for 2024. So this is really to offer redundancy protection for pregnant women who are on maternity, adoption or shared parental leave. 18 months from the estimated week of childbirth, the actual birth date, placement date or start of shared leave. So this protection is only given if there is no other statutory leave protection offered. Okay, so the protection finishes 2 weeks after pregnancy if the employee does not qualify for statutory maternity leave. Next slide, please. And then just to focus on national living and minimum wage rates. So the national living and minimum wage rate increases from the 1st of April 2024 So that will affect 2.9 million eligible workers in the UK, including apprentices. And then from the 1st of April, workers aged 21 and over will be entitled to the national living wage. So the national living wage will increase by 9.8%. So that will now be £11.44 per hour for those workers aged 21 and over. And then, as I mentioned, the national living wage now applies to those who are 21 years and over. So that's a change. It used to be 23 years. You had to be 23 years old to benefit from that before. So the national minimum wage will be £8.60 for those workers aged 18 to 20 and £6.40 for those aged under 18. And then the apprentice rate will also be £6.40 per hour for apprentices aged under 19 or actually over 19 in the first year of their apprenticeship. And then just to reference a change, so from April 24, there is a removal of paragraph 3 from Regs 57 from the National Minimum Wage Regulations 2015. And basically that removal removes the exemption for the definition of work when the work relates to a family household. It does take, there is some guidance to support that explains it in kind of really good detail. So you'll see a link at the bottom of the slide there that you can use and just to be able to absorb and really understand what those changes mean if it is something that would affect your organisation. Next slide, please. So next we'll move on to the real living wage. So this is obviously voluntary. It's a rate that is calculated by the Resolution Foundation and it's overseen by the Independent Living Wage Commission. So if this is a scheme that you do operate within your organisation, it will apply to over 18-year-olds. There were some new rates that were announced in October last year. And if you do apply these rates, then ideally your employee should be receiving this rate by the 1st of May 2024. For the UK, that stands now at £12 per hour, and within London, it's £13.15 per hour. Right, so next moving on to company car rates. So there's no changes to company car tax rates. The electric company car tax rates are limited to a 1% point increase per year for 3 years, starting from 2025 until 2028. So that means that by the time we get to 2028, the maximum will be 5% for electric cars and then 21% for ultra low emission vehicles. And then for all other vehicles, the bands increase by 1 percentage point. So that will go to a maximum of 37%, and then it will be fixed from 2026 onwards for the next couple of years. And then just to confirm for vans and fan fuel benefits, so from 2024-25, the benefit will remain at £3,960 and fuel where provided for private use remains at £757. Next slide, please. Okay, so quite a lot happening around holiday pay changes. So really just relating to, or at least the first part, relating to irregular workers and part-timers. So just to emphasise, for your full-time employees, your regular workers, there are no changes. This change only specifically refers to irregular workers and part-timers. So first of all, there's an update to practices related to record keeping of working hours and rolled up holiday pay for irregular hours and part-time workers. So the holiday pay reference period for calculating the amount for workers with irregular hours will change from 12 weeks to 52 weeks. So that's the reference period. That change comes into effect from the 6th of April. And as I mentioned, the changes to the law do not affect how you would calculate holiday entitlement for your regular hour workers or employees. The regulations define irregular hours and part-time workers. For those workers, only holiday pay can be calculated via the 12.07% accrual method. So if you may recall, rolled up holiday pay was forbidden before. It's now been reintroduced for irregular worker hours and part-time workers only. If you do want some more information, then there is a link there for you to go and explore that in detail. And then the next change around holiday pay. So this case has been going on for quite a while. It went to the Supreme Court and they made a judgment, or they made a ruling. And this is the Chief Constable of the Police Service of Northern Ireland versus Agnew. And principally, the police service, they weren't disputing that the claimant right to recoup their underpayment. They accepted that an underpayment had been made. However, what they were disputing was the period where the claimant was entitled to back pay. However, the Supreme Court ruled that employees can claim for historic underpayments of holiday pay, even where there are gaps of more than 3 months between deductions. So again, I've provided a link there so you can go and explore that in further detail and work out how that would apply to your organisation. Next slide, please. And then a change to the Employment Allocations of Tips Act 2023. So the consultation on this was closed in February this year. There will be new legislation. It is expected to come into force on the 1st of July 2024. And really the point of this legislation is just to make sure that any tips, gratuities and service charges are allocated fairly and the policy is transparent. So 100% of tips and service charges have to be distributed to staff, obviously subject to tax deductions. And the payment of tips and service charges must be paid by the end of the following month that they are paid by the consumer. Agency workers are also eligible for tips, and distributing the tips fairly, it doesn't mean to say that you need to distribute them in equal amounts to your workers. You can actually decide that you will use different proportions. However, it must be clear, there must be a clear policy to support this. There must be, clearly define what those factors are to justify the allocation, and it has to be fair and reasonable as well. So written policies and record keeping is absolutely essential to this. Next slide, please. So next, worth mentioning the right to work fines. So this has now tripled. So where you've got illegal working fines in operation, if those are discovered, then actually that fine will now triple to £45,000 per worker for the first breaches, and then £60 per worker for any repeated offences of that legislation. The organisations without substantial right to work checks in place really need to take note of this. A draft code suggests that all the right to work checks must include either a manual right to work check, or you can use an identity document validation technology, or a Home Office online right to work check. So there are ways and means in which those checks can be carried out, depending on the setup within your organisation. And this change comes into effect, or it came into effect on the 22nd of January this year. And just worth mentioning there that our HR software integrates with Trust ID, which is a leading digital ID service provider. So feel free to email us if you would like some more details regarding that. Next slide, please. And then really we're now coming to the end of the presentation. So just a reminder that there are some changes. So payroll benefits and expenses for the new tax year. If that's something that you want to introduce into your organisation, then do register with HMRC before the 6th of April 2024. And then just some things to watch out for. So these are discussions that are currently taking place within government. So there may be some small pots pension reform announcements coming up, perhaps some auto enrolment changes. Payroll of benefits as well is something that's been mentioned recently. Low pay commission think tanks, HMRC digitalisation. So maybe some further changes regarding holiday pay and entitlement calculation changes. And then SSP reforms, which has been on the table for the last few years, certainly before COVID times. And then I think, you know, it's now been revisited again. So that comes to the end of the presentation, and we'll look at some Q&A.
Thanks, Jasper. I appreciate that sort of whistle-stop tour through the upcoming regulatory changes, and lots of information in there. And this is all being recorded, and you can revisit that at your leisure. And we're also going to make the slides available as a PDF download on our website, so you can look out for that on our socials. Yeah, Jasper, a couple of questions coming in, which I hope you can help us with. So how are the national minimum wage rates affected by salary sacrifices such as pension contributions? Do these amounts increase?
So worth noting, so a salary sacrifice arrangement mustn't reduce an employee's cash earnings below the national minimum wage rates. So that would apply with the rate increases as well. So your salary sacrifice really shouldn't even reduce that increased rate.
Okay, thanks. Hope that answers your question, Emily. Gabrielle asks about the statutory parental bereavement pay and leave. How has this been updated from last year? What changes have been made there? So I'm under the impression that the parental bereavement pay is new for this year, so that is a new change.
Yeah, it is. I believe it is new for this year. If you think differently though, Gabrielle, then worth us perhaps just if you could just drop me an email, and obviously if there is anything to add to that, then we'll share it with the group. But I do believe it's new to this year, so I'm not quite sure of your question.
Okay, thank you, Jasper. And about the holiday pay, which always brings up questions, are term time workers considered as irregular workers?
That's a really good question. I'm not sure on that one. Yeah, I'm sorry, I'm not sure on that one. We'll have to find out and get back to you with the answer on that. I wouldn't have thought so, because term time workers, they do have regular hours, but I will get 100% confirmation on that, and we'll share that with you.
Thanks so much, Jasper. Are there any other questions? Okay, Tina, thank you for dropping into chat. For term time workers, it depends on how the contract is written. That's a very good point. Check the contract for how that's been expressed, and that might give you some clues there about how the payment should be set up. Yeah, a quick Google suggests that it depends basically on how it's all.
Yeah.
Tina adds, if the pay is evenly paid over 12 months, then they are not irregular workers. Okay, thank you, Tina.
Tina. That's
love
very
this chat.
useful.
It's really helpful to get the whole brain trust working. Question from Linda: does the holiday calculation of 52 weeks average have to be for hours worked, or SSP, or whole? I hope that question makes sense to you, Jasper.
Yeah, I'm just taking a moment to look at this. So have to be for Hours worked or SSP or holiday.
Hours
actually worked. Thanks, Diana. Oh, I love this community.
Yeah, brilliant. Yeah, hours actually worked. Any other questions that Jasper or everyone in the chat can help with? This is great having everybody input into it. If there aren't any further questions, then I will just take us on to the close of this webinar, and we will give you half hour back in your day, which hopefully will be of use to you. Oh, last question from Beth. Do the changes in holiday pay affect the additional holiday pay arrangements? I don't know. I'm no payroll expert.
Yeah, I'm just
with us, Beth, or if anyone knows the answer to that, please feel free to drop into the chat there.
Yeah, I mean, I'm just doing a quick look online.
I think with the holiday pay in particular, this is an area where if you have concerns, it is useful to consult a specialist employment lawyer to check the contracts, for example, or a tax advisor, because we are not an advisory company, so we can only offer you the best of our knowledge that we can get. So yeah, if you need advice on a particular aspect of holiday pay, I would seek additional support.
I just I've just put some guidance in there, but yeah, to your point, this is definitely one to take back and explore through your legal advisory teams. Okay, so just from Beth.
All right, lots of holiday pay chat going off.
It's a really complex area.
Very complicated.
Yeah.
Yeah, and unfortunately, we are not going to be able to resolve all of your questions on that. Yeah, somebody asking about the slides. Yeah, what we're going to do is these slides are basically going to be turned into a PDF and made available to download from our website. So look out for those being added hopefully next week, and we'll promote that through social media. So if you don't already follow us on LinkedIn, that's a really good place to find us for all of our updates about webinars and additional guidance that we put out. And we'll make sure that Jasper and I share those as well. So if you find us on LinkedIn, you should be able to find all of our content that we're putting out too. Thank you, Jasper, for your help. Thanks everyone in the chat for your help too. That's really helpful. It's really great. Thanks for asking the questions and sharing your expertise. Like, just to say, if you're watching live, this has all been recorded, and you can get that recording sent to you afterwards. You don't have to take any further action. I would love it if you could fill in the little survey that's just popped up on your screen, just to give us some feedback about how this webinar was, and what other topics you might want to see from us in the future. That really helps us plan our webinar programme. And you can also use that survey to opt in to find out more about any of our HR, payroll or other solutions. You can also find out more on our website or email us at info@ciphr.com. If you want to chat HR and payroll, we're here to listen and here to help. So thank you again so much. We appreciate it. Jasper, thanks for fitting us in and turning this around so quickly after the budget. We really appreciate it. Thanks for your time. Have a great rest of your day. Take care. Bye.
Everyone, bye.